Good afternoon, everyone. Welcome to the Finance and Labor Relations Subcommittee meeting. I'd like to call the meeting to order. And are there any declarations of pecuniary interest? I see none. We have no delegations scheduled, so we'll proceed to the report of Festival Hydro Inc. and Festival Hydro Services Inc. Can I have a motion that the presentation, the Q3 financial results be heard? Councillor Beattie, all in favor? And that's carried. So I'll turn the meeting over to Mr. Graham.
Thank you very much. And I'll pass it over to Allison. Thank you.
Thanks for having me, everybody. It's lots of new faces, which is good. And then if you do have any questions, because I am used to doing this for different groups, if you have any questions, stop me at any point if you want more or less detail. Also, just to note, these are obviously our September 30th results, so we're a little bit lagging behind. I'll try to offer a little bit of insights into where we're ending up for the end of the year, but you'll see our year-end financials at our next meeting, as well as probably Q1 at that point as well. So I'll try to offer some additional tidbits of info. So for FHI, so this is the Festival Hydro Inc., so our main distribution financial statements. Our net income for the period at the end of September is 1.745 million, 333,000 above the year-to-date budget. I do anticipate, as I mentioned, year-end coming in around that amount or higher in terms of ahead of budget, and I'll get into some details about that in a minute. Our accounts receivable balances, so this is mostly our receivables from customers, are in a really good position. The amount is higher than it was in September of 2021, but they are all current balances, not arrears balances that have increased. So we have been throughout the year of 2022 really making some good improvements compared to arrears balances, and ensuring that customers are keeping up to date with their accounts, and that's really positive coming out of COVID. And obviously we'll keep on top of this as we move through the next few months. Inflation and different things are really starting to cost a lot more money, and we're hearing that from customers. So we'll just definitely keep an eye on these balances. We are also now, as of November 15th, in a winter moratorium, so we are not allowed to disconnect customers for non-payment, residential and small commercial customers for non-payment. So we do tend to see a spike in arrears through this period until we are able to start disconnecting again in the spring. But that's just something to keep an eye on as we move through the next few months. The one other note I wanted to mention on our balance sheet, we are seeing large fluctuations in our regulatory assets. So these are balances that we have for cost of power and global adjustment from the IESO, which is who we buy our power from. And we are seeing large swings in the actual cost of power throughout the year of 2022. At certain months, we were seeing global adjustment rates being 0 cents per kilowatt hour, and in other months we were seeing them at 10 cents per kilowatt hour. So that really, while it doesn't impact our bottom line as a utility, we do see the cash flow swings throughout the year. And so that impacts our unbilled revenue, regulatory assets, accounts payable, and our cash flows just in general. So you'll kind of see that note throughout. It is somewhat of a confusing area of our business, so if there are any specific questions on that, please let me know. As far as we go into the income statement side, our distribution revenue is 204,000 above budget at September 30th. You will see when we get our year-end financials that we do come a little bit closer to budget by the end of the year. We didn't have as much usage through the fall months. I think we had a relatively milder entry into the year, other than that Christmas week where we did see some colder weather, but generally we did see some milder weather, which does impact how much energy is used by customers. So that amount above budget will start to decrease slightly as you see our next statements. On the other hand, though, our controllable costs were 333 less than our budget to the end of Q3. Some of that being operating maintenance, just due to less maintenance and reactive work that we saw. This number will be slightly higher through Q4 as we pick up some maintenance work and reactive work and tree trimming near the end of the year. But we consistently stayed under budget in billing, collecting, and meter reading and administrative expenses through the end of Q3 and continue to as we move through the end of Q4. So this is where we will pick up quite a bit of our net income through the last few months. And really those expenses are driven by staffing levels. When we do have a vacancy, we do see a large impact on our billing, collecting, meter reading, and administration expenses decreasing. We did kind of in that billing area, we had an dedicated IT employee, and we did do a shift in the year and didn't quite replace that position, but did pick them up in Rhizome, and now they only bill out hours that are directed to Festival Hydro specifically. So it does decrease the overall cost to Hydro in that area. For a big chunk of the year, we didn't have a VP of IT position for the first half of the year that was budgeted for, and then unfortunately we did lose this position as well. The position was vacant again in December, so we will see that decrease as well. The other expense that did increase was interest, which I'm sure everyone's seeing with interest rates going up through the year. So our line of credit interest rate did increase, as we do have the RBC prime rate is what our line of credit is based on. So as that rate increased, so did our interest expense. But we aren't always using that, only at certain points of the month. So we do monitor this account as well. So that's all I have that I wanted to speak to on the FHI side, but if there's any questions, I'm happy to answer anything.
Councillor Burbach.
Thank you. Thanks for your presentation. Just a couple of things that I'm curious about, and then one question about something I read. So your receivables are higher this year, and so do you have any general sense of why that is? Is it more consumption? Is that?
Yeah, so it's a mixture. So the rates are higher this year compared to last year. That would be not necessarily our Festival Hydro's rates, the distribution rates, but more so the cost of power rates have increased, time of use rates increased. So that's a chunk of it. And then also consumption was up. If you were able to see kind of a trending between 2019, 2020, 2021, we did have obviously a decrease through 2020 and 2021. So we're getting back to those normal levels of consumption. So that's why those amounts are higher.
Right, that makes sense. Thanks. So I had another question too. Just you were talking about the regulatory cost swings. That sounds like to me it would be a budgeting challenge. Like, how do you just guesstimate that it's going to be somewhere between 1 and 10 per kilowatt hour or whatever?
It's very difficult. And generally we could. I mean, I've been in this industry for about 10 years now, and this is the first year where I'm seeing this wild of swings. So it is really tough to budget. We've seen months where our bill from the IESO is 1 million, and the next month it's 10 million. So it does really impact us. But the main thing that we are just making sure that we have enough credit on hand if we need it, and then we kind of catch up in those months where it's lower. So it does seem to even out throughout the year. It's just the swings that cause kind of that issue. And you're right, it does cause a problem for budgeting and just in terms of cash flow more than anything.
Right, interesting challenge. So I just had one last question. This is more of a I don't understand all the terminology there. So there's something in here that says non-RPP and RPP customers. So I just didn't
Yeah.
know what RPP
Yeah,
stands.
so RPP is regulated price plan. So customers who are on time of use or tiered, so that's mostly residential and small commercial, they're on a regulated price plan. So the rates move in the background, but customers don't see those rates moving, whereas large business customers are technically non-RPP, so they get charged the real true rate, and they'll see those rates on their bill differently for everyone else. It just helps obviously for the residential and small commercial who are less sophisticated customers. They don't see those large swings, but those actual costs are happening in the background, and that's what we settle on every month.
Right. Okay. Thanks very much.
No problem.
Any further questions? Looks like no. So I have a staff recommendation that the Festival Hydro Inc. financial statements and commentary for the period ending September 30th, 2022 be received for information. Can I have a motion? Thank you, Councillor Burbach. All in favor then? Okay. Oh, I guess my apology. I should have asked if there was any question or comment or concern about that before I called the question. And there was none. So just one more time to make it clear then, since there's no question, I will, or no comments, I will call the question again. All in favor? And that's unanimous, so that's carried. I think we can proceed then with the Festival Hydro Services report, if we can, please, Allison. Thank you.
Sure. So Festival Hydro Services Inc., just for everyone to be aware that also is Rhizome Networks. Those names are used interchangeably, just so I don't want to confuse anyone who's new to the committee. The net income for the period for FHSI is 53,000, 14,000 higher than budget, but 54,000 lower than at this point last year. Just for anyone who's new, we did have, there were several reasons why we in 2022 were budgeted to be lower than the prior year, and we have gone through a substantial strategy session in the last year and a half to look for new opportunities and new revenues. So that is why there is a large swing from where we were in 2021, and we did lose a customer that decreased revenue quite a bit, but we did plan for that, which is why we are ahead of budget but below where we were at prior year. On the balance sheet, we're generally relatively close for each of the areas compared to budget, and the reason mainly being for any accounts receivable, accounts payable, cash balances, they are all run through Festival Hydro Inc. And we just true them up every month as those expenses and receivables are brought into the organization. They're run out of the same bank account. So that's why you'll see that there's not a lot of fluctuation in those generally. Where we will see that kind of overall fluctuation is in the due to from FHI balances, and that's just where all those transactions run through. From a capital asset standpoint, we were at 75% of our Q3 budget. We did do a lot of really stabilizing and strengthening projects early on in the year in 2022, making sure that our servers were really strong and all of our networks were backed up, or anything that was nearing end of life and could risk the failure of our networks were all refurbished and set up so that, you know, our response times and our downtimes were really decreased through this year. So we're really happy with where that's going. We did have some funds spent on fiber capital as well as a little bit on Wi-Fi capital through the year, but we didn't plan for significant projects in those areas. And we have had limited costs related to Whiteman network expansion. In the past, we did have significant costs there, but we over 21 and 2022 have not seen many expansion costs in that area. On the income statement side, our revenues are lower, 62,000 lower than the budget in Q3. And the main reason being, and you'll see this both in the revenue side and in the operating expenses, in the consulting line is basically our labor that gets billed out. All of IT services for Festival Hydro are completed through Festival Hydro Services. So any employee time that's used for IT for Festival Hydro is billed through Rhizome Network. So if we have any vacancies through the year or employees that were budgeted at a higher rate and then we ended up hiring at a lower rate, something like that, you'll see a decrease in the revenue line, but the corresponding decrease also in the operating expenses line. So if you look at those two lines in the financial statements, they tend to balance each other out. So we did have some staffing amounts that were decreased in 2022, and then also again in the operating expenses. We did start to have a full staff complement halfway through the year. And we are still fully staffed with that same complement through the end of the year. So that's a really positive note we have. It's been hard, I think, for all businesses to manage their IT staffing in the last year or so, just with really competitive businesses and attracting staff in the IT area. So we're happy that we've been stable for about the last 8 months. And the other comment that I wanted to make is about our, there is a decrease in cost just due to pole attachment rates. So anytime any third party, so whether it's Bell, Rogers, or in this case, Rhizome Networks are attached to a hydro pole, the Ontario Energy Board does set a price on which we can charge for that. So in 2021, we were able to charge $44.50, and in 2022 that dropped to $34.76. So a benefit on the Rhizome side, but obviously a little bit of an offset in lower revenues on the Festival Hydro side. And those are all the main variances that I'm going to talk about there, but happy again to answer any questions.
Any questions? I know I had, excuse me, sent an email question regarding the business development expense. And I wonder if you could just review that for us, please.
Yeah, so the business development expenses, as I mentioned, are basically just our labor and labor costs associated for those things. And what I plan to do for our year-end financial statements is rename that account. So to separate actual business development activities from just our standard labor charges, just to make it more clear, because it does look like we're spending a lot on, say, marketing or something like that, but it's not the case. That's just where all of our employees sit in those accounts.
Thank you. Any further questions? All right, so I have a staff recommendation that the Festival Hydro Services Inc. financial statements and commentary for the period ending September 30th, 2022 be received for information. Could I have a mover for that, please? Councillor Beattie, any comment or question regarding that motion? I'll call the question then. All in favor? That's unanimous. That's carried. Thank you to Ms. Conrad and Mr. Graham. And we'll proceed with item 5.1, the report of the Director of Corporate Services regarding the downtown BIA. And I'll turn that over to our Director of Corporate Services.
This report is really just a cover report to give a bit of context for our upcoming guests from the BIA, but it outlines the fact that the draft budget is subject to council approval, and that even though the BIA board does pass their budget and city administers the collection of the BIA levy through the business owners in the catchment area. It's really just a bit of a information report for the committee's consideration. So I think we could maybe turn it over to the BIA representatives to carry it from here.
Thank you very much for having us. I appreciate the opportunity. Jamie's going to talk about kind of a review of our projects for the year, and then at the end I'll talk about the 2023 budget. Thanks, guys.
Thank you, Sean. Appreciate that. Next slide, please. Our downtown BIA is 50 years young in 2023. It is our anniversary. Our actual birth date was August 27th, 1973. At the time, the mayor was Keith Culleton, and the board was made up of some prominent individuals with such names as Blows, Stuthers, Helm, Sylvester, and Rio Thompson, along with the support of Alderman Wilson as our council rep. Next slide. A BIA is built on your strong membership, and your BIA has a fantastic, vibrant membership. In the past year, in 2022, we have had 30 new businesses open in the BIA. It's a very good position to have, and it's nice to see continued full stores and not vacant windows. Next slide, please. 2022 was a busy year in downtown Stratford with lots of marketing to support and promote initiatives such as Lights on Licious, Car Free Fridays, the new Connection Center opening, and the theater coming back strong. Numerous campaigns and contests were all designed to bring visitors and entice residents to help shop locally. Next slide, please. All typical annual holidays and events were well covered, and also a few lesser known rounded out our efforts, such as the Robbie Burns Day, Random Act of Kindness Day, Family Day, International Women's Day, and many more. If it was a celebration, we were there to make sure that our downtown knew about it. Next slide, please. Also in 2022, we introduced a new branding. We saw with the new branding, we had a new modernized logo to replace our old one, and a new website with updated features for both the visitors and a membership section so that the members could be informed of various activities and things. And coming up, we're going to be adding an educational component to it where there will be different things that they can go on to and have some learning experiences. Marketing also works to reach and inform our membership through a members only Facebook page, regular email blasts, a monthly newsletter, and these avenues are used to help pass on city updates and initiatives to the membership. Next slide, please. Wonderland winter events. I hope all of you had time to make it down to the Winter Wonderland. It was a glorious experience. It was an event that we put together. It was family friendly and free to all those that participated. It featured a carousel, a blacksmith, bonfires with ability to make your own s'mores, scavenger hunt for the kids to spot the Santa and win an awesome chocolate prize, and a contest designed to entice down shopping with over $2,000 worth of prizes that the BIA purchased from the downtown merchants rather than ask for donations. We did a free will offering, which raised over $1,000 for the Connection Center, which we were quite proud of to be able to help those folks out with. And it was all supported by 52 volunteers, so we're very grateful to. Next slide, please. Beautification worked on a public art plan this year to help shape and design a framework for as we try and move forward with adding new art and art installations to the downtown area. We had an amazing mural by Stratford artist Kellen Hatanaka. We also had the community engaged art program that gave budding artists and young and old the opportunity to express themselves by animating one of the BIA huts in Market Square. And we installed 2 new bike repair stations with air pumps and tools to encourage cyclists downtown and support more people power in the downtown. Next slide, please. We are very proud and amazed by the snowflake interpretations of the 9 high school students. They are led by an established local artist that were commissioned to animate over 30 downtown businesses featuring their interpretation of what a snowflake is. And these can be seen until the end of the month and possibly longer if the businesses care to leave them up. We made them non-seasonable and use snowflakes because we all know snow lasts longer than the end of January here in Stratford. Next slide, please. The A&E committee worked hard to provide equity, diversity, and inclusion training for all board and staff and other members of stakeholder communities. This training has been followed up with the development of an equity, inclusion, diversity, and anti-racism policy, which they're working on now and hope to have finalized within the next few weeks. The committee is also working and supporting efforts of prominent groups and organizations to create a welcoming community. There are ongoing activities right now to help gather information and input. Next slide, please. For 2023, there are many major projects planned for this year, but I want to point out 2 of our major goals. We want to develop electronic downtown dollars, which will replace our current paper versions with a credit card version, which improves the flexibility and the management over the overall card, the funds, how they're dispersed, where they're spent. And it'll give us some great advances in reporting, so we'll be able to analyze all of the data much better. The second is to update and introduce a strategic plan to be able to use to act as a roadmap of our mission for years to come. Next slide, and I'll turn it over to Sean to speak to the finances.
Thanks, Jamie. So obviously, Jamie just went over everything we did this year, and then moving forward for 2023, this is what our proposed budget looks like. It was approved by the BIA board. And I guess to the point that the Director of Corporate Services made, most of the money that forms the budget comes in the form of a tax levy to the landlords in the downtown catchment area. So you can see that the top portion of our budget is the revenue coming in. I and the board and the staff have really looked at the tax levy for next year, and we are not increasing it at all. We are leaving it exactly as it was this year. Partly because of some of the other items below, the interest on our accounts is far greater than it was a year ago. So unlike Festival Hydro, where they have debt that they're servicing, our side, we're getting the positive side of it, which is a good thing. HST rebate is the same as last year. The community collaboration and the grant revenue, they're in there. We've been very fortunate last year in some of the projects that Jamie talked about where we've received grant money, and it's primarily one of the reasons why we're not raising the tax levy is because we're getting some grant money that's going to flow through into this budget year. And then the other ones are just ones that I cannot budget to, so they're kind of left in there as kind of just placeholders. The expenses are pretty much in line with last year. Our kind of staffing fees have gone up as every other staffing fee has gone up with cost of living adjustments and things of that nature, as well as some office operations. We've increased that slightly, where we actually do have a bookkeeper that does provide our payroll servicing as well as T4ing and things like that. The city does provide that kind of back office for us, but we do have some expenses on our end. Strategic plan that Jamie mentioned, we did put a dollar amount against it so that it did happen. We have two kind of policies that are in the works, as Jamie mentioned, with an art policy as well as an eater policy as well, which are going to direct things, but we need to have a proper strategic plan moving forward, especially like yourselves, where there's a new council. There'll be a new BIA board as well, which will provide some guidance towards that. Advocacy and education, we increased that slightly. The insurance is going up for next year, so that's the liability insurance. I also wanted to put in some director's insurance, which we've not had for the board, so that is put in there as well, and it's all costed out, and I've put that together. AGM membership, it's down because we haven't had a physical AGM in person in 3 years. So obviously the cost of running an AGM virtually like this is a little bit different than in person. Phone is in line with what we did before. The anticipated tax levy, which is where businesses close and we pay those people back, I've increased the amount from last year because of the fact that although we've had a number of really wonderful businesses open, we have had some businesses close. So I've accounted for that. And then below, in terms of the projects that Jamie talked about, community engagement, the holiday animation, which is that Winter Wonderland, director sign maintenance, I've dropped it because we did a lot of expense in this past year. So I don't expect there to be much cost in 2023 because we're refurbishing all of them. Promotion, I dropped it a little bit because we're using digital gift certificates, and we'll create a stakeholder group and we'll do all the proper processes for looking at that because there's a lot involved with that. I did this at the Stratford Festival 20 years ago. I know it's a lot involved. Director of Corporate Services and I have briefly talked about it, and there's opportunities down the road for sure for all the key stakeholders to be part of that. But to the point that Jamie made earlier, there's another side of it, which for me is the liability and the risk of having paper gift certificates, which is a pretty scary thing for me being in the financial services business. Website maintenance and hosting, I dropped that down because we did the brand new website. There's a little bit of kind of maintenance that goes on. First year, you never know what your costs are going to be, so I kept it up a little bit. The Destination Stratford contributions there, beautification is in there. And then we do a collaboration and partnership with Destination Stratford, which is the Destination Animation Fund. So all in all, that's our budget from a revenue and expense standpoint. There's nothing really that I would say that is kind of eye-popping or outrageous, but it was really important to the staff and to the board that we kept the tax levy as tight as possible and not increase it because we know that small business, especially those of us in our catchment area, are really struggling, and we're potentially heading into recession at some point this year. So we want to be there for our businesses moving forward. So I would open it up to any questions.
Councillor McCabe. Oh, you're muted, Larry.
My apologies. This is through the chair to probably Jamie. Regarding the Winter Wonderland, how did that compare to the previous incarnation of the winter sort of promotion, which was the winter marketplace? Just from my perspective, I would say that it wasn't as successful, and I'm just wondering the decision to change that, or this came before you, but just as do we have numbers on that?
Apologize, I don't have any numbers on it.
Yeah.
Decision to change it was based on the fact that one, there was a plethora of markets happening in the same time frame, including one at Tom Patterson. We also had some concerns in the past of selling things in a market that retailers are struggling to keep things going. So it was decided not to have the market format for those reasons.
Any other questions? Councillor Burbach.
Thank you. Through the chair, just more of a comment. I just wanted to thank the BIA for all the work that they've done, especially through COVID. I think you guys do a great job and really support those downtown businesses, which is the main goal, but you know, animating the space and getting people to come down. So keep up the good work.
Councillor McCabe.
Also, just to comment, I'm really happy to see that you're moving to a digital format for the downtown dollars. I think you'll find that it's going to be a much more, it's already successful, but I think that you're going to find that it's going to be much more successful as a digital option. So I'm excited to see the rollout of that.
Thank you.
Any further questions? No. I have a staff recommendation then that the 2023 budget of the downtown Stratford Business Improvement Area be approved as submitted in the amount of $325,272.50, and that the sum of $299,472.50 shall be levied on properties located within the boundaries of the downtown Stratford Business Improvement Area for the year 2023. Do I have a motion on that? Councillor Burbach? Any comments or questions? Oh, I see one from the secretary.
Through you, I'll just note there was 1/3 paragraph in the staff recommendation there. It just says, and that staff be directed
Yes.
to bring a prepared bylaw to a subsequent meeting for approval.
Thank you. I forgot to turn the page. So I'll add that, and that staff be directed to bring the prepared bylaw to a subsequent meeting for approval. So that was moved by Councillor Burbach. Questions or comments? No, I'll call the question. All in favor? That's unanimous. Carried. Thank you for your report and for the work you do downtown. So moving on to 5.2, Ontario 2023 Ontario Regulation 284/09 excluded expenses. And I'll turn to our Director of Corporate Services if there's any presentation she'd like to make on that.
Thank you, through the chair. I'm having some difficulty with my volume. Is this any better than previously?
It's still pretty quiet.
Okay, my apologies. I don't know how to fix that, but let me see if I can. How about now? Is that any better for you guys? No? Okay.
Not really.
All right. I'll try and be brief. I don't have a lot to add to the report. This particular one is a regulatory compliance report that we're required to submit under the regulation noted. It's really just to talk about the differences between the cash expenses that the city records and the public sector accounting standard requirements to record non-cash expenses for amortization, landfill, post-closures, and post-employment benefits. So this is something that probably in future years we will have to add asset retirement obligation expenses to as well. But for now, this is really the three areas that have been identified by the regulation. So really the adjustments that we make at the end of the year relating to these adjustments are captured in the report and would translate, if we were to include them in our tax levy, to approximately $10 to $12 million annually. So we don't, and we're not intending to go that route. These are just adjustments that we're required to pass through the committee and through council for approval.
Thank you. There is a staff recommendation that the report titled Ontario Regulation 284/09 excluded expenses, and that's open bracket FIN 23-004 close bracket be adopted. Do I have a motion on that? Councillor McCabe, any questions or comments on that motion? I see none. So I'll call the question. All in favor of the recommendation? That's unanimous and carried. And then 5.3 is the asset retirement obligations, financial FIN 23-005. Did you want to speak to that, Ms. Kruger?
Sure, if I may briefly, through you, Mr. Chair. This is another example of accounting regulations determining things that we need to be recording and being transparent about in our financial records. So this one has arisen almost as a derivative of the landfill post-closure cost regulation, and it's an expansion upon that, whereby the city needs to identify any costs associated with retiring assets beyond landfill. So we had already captured those through the landfill post-closure costs component, but this includes things like where the city's identified any environmental retirement costs, such as, say, disposing of asbestos, or any kind of environmental say rules around how we dispose of certain types of products or certain types of assets that we have. So this report is really to bring the initial policy forward. There's still some work to do at the staff level to identify what those are and determine some form of measurement for them. But this was just really to get the policy in front of council and let them know that that this regulation and this accounting standard has come into play for 2022 and years beyond.
Thank you. There is a staff recommendation that the draft assessment retirement obligation policy attached to report FIN 23-005 be approved, and that staff be authorized to establish a new assessment retirement obligation reserve fund if/as required. And this new reserve fund be added to F.1.13 reserve and reserve fund policy. Do I have a motion to that effect? Councillor McCabe, any questions or comments on that? I see none, so I'll call the question. All in favor? That's unanimous and carried. Thank you. Number 6, advisory committee outside boards. There are none. Number 7, our next subcommittee meeting is February 21st, 2023 at 4:30. And number 8 is adjournment. Do I have a motion to adjourn? Councillor Burback, my apologies, and all in favor? That's unanimous. We are adjourned. Thank you, everyone.